California Dream for All program, it is out of money. What's up, everybody? Welcome back to another episode with your one and only Kenny Simpson. This is The Brief, and I'm only doing The Brief this week. Crystal's back. She's got you on the scoop, so she's got you covered there. Let's jump right into it. Let's not delay. I've got so much stuff to go through. There is so much stuff going on out there, but I got you covered. First, what are we going to go over? Inventory. How are we looking? Not good at all. Inventory is down. We were at 24 and change last week. Now we're at 2334, 523 pending. It's springtime. Where in the world are our listings? Because they're just not here. They're not showing up. There's a couple states that are starting to pop a little bit. I just looked at the calendar. It's all orange. They'll be on my monthly webinar coming up in the next week or so. There's a couple blue, meaning that they're getting a little bit more inventory. But guys, it is dead out there. There's no inventory. Not good. Also this week I want to talk about is interest rates. Well, guys, we basically started the year, interest rates came low, then they came high, then they came back low, and that's where we're at now. They're pretty much flat week over week. Last week was a little bit better. This week, a little bit gone up. And so if you lock them, got them. What's going on in my business? A lot of purchases, actually a lot of refis, people refining out of private money loans, cash out refis. Yeah, they're giving up those low rates, but they're either buying a deal or maybe buying a partner out. A lot of different things going on. So with that being said, I know it's not easy to give up that 3% or the 4%, but we're trying to make it happen and do the best we can for you guys. What else is going on? Is locks are up 43%. You know, that's just a number because obviously volume's down low. Refis are still down probably 85%. Purchases are down. I think just in inventory, sales are down 30% in San Diego from last year, year over year. So that's pretty interesting. What else is going on this week? Oh, before I jump in, let's talk about what moves the market with rates, right? So I have a couple notes here. So it's kind of like poor demand, decent demand, getting better, and then good. We're actually hitting the good. So between 5.5% and 6% on a conventional rate, that is strong buyer demand. Obviously, if we plunge below that 5.5%, we are going to see a lot of people move off the sideline. So I have conversations every friggin' week, literally, if not every other day. People are going, Kenny, I don't know if I'm going to wait or this or that. And look, I'm not here to tell you what to do. I'm here to give you the data. And all I can tell you, I was having a little debate with an underwriter and a appraiser department, and they tried to tell me that some guy came out and clicked declining on this desktop appraisal. And I went up and I called the underwriter and had him on the phone. And I said, I pulled up this is in El Cajon. I pulled up all the sales in the last 60 days. And I said, okay, you ready? And read off, 30, 40 listings. And I said, did you hear what I just said? That 98% sold over ask. The rest sold at ask and then a couple under. I said, how is that a declining market? So I will tell you guys, and I tell everybody the same thing. If you want to sit back and wait for rates to go at 5%, then do that. Because I know you're like, well, affordability and this. What you're going to do is instead of 7 to 30 offers on a house right now, if inventory doesn't tick up and those rates come down, you're going to be looking more 30 to 50 offers. Am I exaggerating? Possibly. Could that happen? Absolutely. If we don't have the supply and rates drop, I am telling you, we'll have a little bit of refi boom. People are going to come out. That 5% is a psychological thing for people. They're going to jump off the fence. That is going to happen. But that house that you're looking at for $750, $850, $900, the $900 will go to $1 million. The $850 will go to $950. The $750 is going to be $850, if not higher. And you think I'm exaggerating? Well, go back to 2020, 2021, 2022 in the beginning, where those people were paying a little bit over ask. And then you're going to see pay more and more. So what you're seeing now, as we entered last year at the market was probably the best time to buy. As I did mention on videos, I thought the best time was last fourth quarter of last year so far. Could things change in the future? Absolutely. We don't know what's going to happen. Then it went into, buyer's market. So it started to decline. Then we got a little stable. Now we're getting stable. Now you're going to start seeing appraisers check that box saying increase. Because if I just told you if El Cajon had 98% of the listings sell over. The next person that lists, so their neighbor that sold for 650 that listed at 625, now they're going to go, well, why don't we list for 650, 675? And that's how this goes. And if the new buyers come in and pay that, you're going to go up and up and up because there's no inventory. So if that hits 5%, and I just told you 5.5 to 6 is the strong buyer demand, it's going to be whatever beyond strong is, like Superman, superpower, right, buying. So that is going to happen. What else I want to talk about this week is what's going on with the news, with the feds. What are we looking at? We've got retail sales out. We got the mortgage applications report out, which I'm guessing is going to be up. We have CPI report out tomorrow. I think retail sales are out tomorrow. So we're going to see what's going on with inflation. That could interrupt or disrupt rates here, whether it's higher or lower. I'm not sure what inflation is going to do. My guess is we're seeing it decline month over month. Retail sales, I heard they're down from February. We'll see what happens. And then mortgage applications, my guess they'll be up. What else is going on out there? Banks, small regional banks. If you guys work with them, lend with them, yes, there's talk. There's a lot of media, a lot of drama, a lot of blah, blah, blah. But what is going on out there is, yes, some are tightening, some are raising rates, some don't want to lend. It's all these equations. So it's going to be harder to get the business loans and the commercial loans and the construction loans, right? It is going to happen. There are some banks. We had a chief credit officer in here last week. I'm not going to mention the bank, Lend SoCal. They're ready to lend, great balance sheet, a lot of liquidity. They pretty much did apartment loans here in Southern California. They know the market, they understand it. They are kind of combining forces with another bank out of the East Coast. So I said, do you have any problems affecting you? He's like, Kenny, we're ready to lend. We're ready to go. So he said, not everybody's going to be affected. They didn't go crazy when rates were low and fill up their balance sheet with loans. And now they have to recalibrate their balance sheet and liquidity and all that. So that is going on. So not every bank is going to be pulling back, but some will. But what is going to be the alternative? This is just like happened if you guys weren't around last cycle, 2008. Remember, last cycle, financial crisis, much worse. But what happens when the banks and things like that don't lend? Residential, Fannie, Freddie, FHA, VA will pick up that, right? In the secondary market. What else is on the commercial side or anything else like that? If these other alternative banks don't pick up, what's going to happen when your construction loan doesn't go through and you want to get it done, you're okay with paying the higher rates, you're going to go get a private money loan. That's the calls are already happening, the conversations are happening, the deals are happening. That is what's going to happen. So what's your alternative is you might have to get that bridge loan or that other loan where you can't sit here and wait for a bank. You got to go get the private money loan. You got to go raise more capital, whatever it is. So sitting here waiting for banks to lend a year or two from now might not work for you. So you got to go get that private money. And honestly, between private money and where you're going to be at anywhere getting a construction loan, I don't know how much further you're off, but it's not like it was when you can get construction money at 3-4% and private money wanted to give you 8-10%. You're probably, I don't know, you're all around 10%, 12%, whatever. So the gap is definitely tightened as far as how much spread the difference is between private money and traditional money. What else I want to talk about this week is the $1 trillion that has come out of the banks institutions. So small and big banks, $1 trillion out. Why is this? Do you know why? I'd like to hear it. Tell me why. Why do you think it's happening? Well, let's go through a couple scenarios. Number one, SVB crisis. People freaked out, moved money all over. But remember, I told you it was coming out of the banking. So a lot of money before the banking crisis, people were sitting there not paying attention. People didn't realize that the 6-month treasury bill or the 2-year treasury bill or the 3-year treasury bill or a money market account or a CD was paying, 4 or 5%. Some of these banks are getting, some of these credit unions, I posted something the other day, they're at 7%. A lot of people were sitting and sleeping behind the wheel on their checking and savings account earning 1%, 1.5%. And all of a sudden this banking debacle came and everybody starts looking around going, oh my gosh, like my money okay? And they start looking around going, wait a minute, why is my money in the savings account earning 1% when I can move it to the money market account, get 5%? Or call my broker over here and move it into short-term treasuries at 5% or whatever. So people are getting smarter, they're paying attention, and this just raised awareness, this SVB, right? People to stop and go, wait a minute, pay attention. What is going on? Where is my money, right? And so remember, guys, I talked about this before, stopping and paying attention to where your money is going, whether it's monthly, where your money is invested, what's going on with your properties, your business, all that, is spend an hour a week of paying attention where your money's invested. where your accounts are sitting at, what stock you're invested in, where your 401 IRA, annuity, all this is set. Where's your pension money at? Go pay attention to this, because if you don't know and something happens, then you're just reacting instead of going, okay, I know where my money is. So if something were to happen, this would have to happen to affect it. You don't even probably know what you're invested in and what's going to affect it or not. So it's just good to take the time to study this stuff. And last but not least is home prices. So I was just reading this before. So year over year, we're actually up 3.8 nationally. Here in San Diego, almost flat, a little bit down. And month over month, nationally, where it's like negative 0.2, so it's almost flat. So month over month is different than year over year. So, but remember, Black Knight, huge data company, just came out with an article last week. I think I posted. They started recognizing there's many markets out there that are starting to show appreciation. Remember, we went from declining to stable to appreciation. That's what's happening. Why is that happening? Well, we don't have enough supply. So we basically have way too many buyers, not enough supply, not enough not enough inventory, not enough home building, all that stuff. And with rates coming down, kind of creating the perfect storm. And last but not least, I want to leave you with just a little bit of information from my data over drama, if you didn't catch that. So I'm going to start talking a little bit more about those charts. But one of the charts, which is very fascinating, is we used to have a saying back in the mortgage industry or the real estate is, hey, everybody refis or moves every 5 to 7 years. That's what it was. Today, everybody's doing something every 13 years, maybe because of this crisis we're in right now, the housing crisis, which no inventory, rates are a little bit higher. So somebody that bought, pre even 2020, for them to go sell their home, they're going to have to trade up, but they're going to pay higher taxes, higher payment, higher insurance. The whole thing's going to be higher. It doesn't make sense, especially if people are sitting in their houses and redoing the kitchens, the bathrooms, the yard, all that. They're like, I can live here another 20, 30 years. My point is that people are staying in their house longer. People are living longer. This is causing less, moving up in houses, going from the, 2-bedroom, 1-bath to the 3-bedroom, 2-bath to the 3-bedroom, 2-bath to the 4-bedroom, 5-bedroom house. That's not happening right now because people are stuck and they're fixated on that rate and that payment. So this is causing inventory to basically be non-existent. And on top of that, how are we going to build our way out of this? There's just no way, especially a place like San Diego. It's a nightmare to build here. I mean, you can't even get an ADU approved in like a year. Sometimes it's longer. It's ridiculous. So until you fix that problem and you fix, trying to get some affordable housing and things like that, guys, we just can't build fast enough. We're just going to be, it's going to be a problem with just inventory. And this is what we're living in. So, I've been asking anybody, how are we going to get more inventory? Unless people just start listing or people lose jobs and it's flight to cash or, something like that. It's just going to be a slow, gradual inventory release. So maybe rates, they came down to 5, 4.5. That would get people to trade up. I don't know, because they're going to be buying the house more expensive. They even bought in 2021 and before that. So you and I know that. So it's really going to take somebody to move up and, or, like flight to cash or divorce or split up or something. So anyways, until next week, we will check in these reports. If you didn't get my data over drama, let me know. I'm going to send out the PDF in this coming week, and I'll send out the recorded video. Great information, great detail. Try to make the intro exciting. Had a little glitch with the video, but otherwise excited for it to share with all you guys. If you have any questions, please reach out. Thanks for watching. Share the video. And until next week, have a great week. See you guys then.